Hello, and thank you for joining us for today's webinar on pricing for profit for tourism businesses. We're delighted to be joined today by Tony Harron, Director at Admore Business Solutions, who will be sharing some useful insights with us shortly. This session is being delivered as part of our Tourism Enterprise Development Programme. We've been working closely with industry over the last number of months to shape and roll out this programme and respond as best we all can to the unprecedented events of 2020 and the ongoing impact of COVID-19 on the industry. You can access a range of COVID-19 support materials as well as signing up for webinars and expert advice on tourismni.com and covid19.tourismni.com. We've initially prioritised financial support, including financial planning, setting financial targets, cost-based analysis and pricing, as these are the type of areas that continue to be raised with us by the industry. We'd encourage you to continue to feed in on these priority areas. If you could complete the feedback form following today's webinar, we can continue to tailor the programme to your needs. Or indeed at any time, feedback through tourismni.com or covid19.tourismni.com. It's my pleasure now to hand over to Tony Harron for the main presentation. I hope you all find the session useful and informative. Thank you.
Hello everyone, and thanks Rosemary for the introduction there, much appreciated, and thanks for the opportunity to come along this morning and present this webinar on pricing for profit. Just a very brief background on myself, for those who don't know me. My name is Tony Harron and I own and manage Admore Business Solutions, and I'm a finance mentor with Tourism NI, and I'm also a finance mentor with 7 local councils. I'm an accountant by profession, so finance is the things that I get involved in with small businesses. I don't typically do their books, but I do get involved in other things like looking at bookkeeping, improving bookkeeping, looking at business plans, business planning, forecasting and that. And one of the areas that has come up a lot recently is pricing for businesses. It's an area that businesses are particularly interested in at the moment. And so it's an area I find increasingly that I've got involved in terms of talking to businesses. So I think the topic this morning is quite relevant in terms of where businesses are and in terms of where the economy is. So I'm going to go through a presentation, and effectively we're going to be looking at a range of different elements of pricing. So I'm going to look at the context of pricing first of all. So I'm going to try and explain that pricing is really important, but it isn't necessarily something that stands alone. It is something you can look at on its own, but it crosses into a whole range of other areas in business. I'm also going to look at profit because this is about pricing for profit. I'm going to look at the definitions of profit just to explain why each of those definitions are important. And then we're going to go through different pricing methods, and we're actually then going to talk about how to apply those pricing methods to your business, and we're going to look at how you apply them in what I've broken down into 6 practical steps. So you can see how pricing can be applied into your business, and you can make what I think is a more structured, or take a more structured approach to pricing. And then we're actually going to break out a little bit at that point, and I'm going to show you a template that can be used in businesses, and I've used it quite successfully with a range of different businesses, and in terms of how you can look at pricing and how you can get it down into numbers and figures and pounds and pence. So we're going to take a little break. I'm going to show you how that works, and then I'm going to come back into the presentation at the end. I'm going to talk about pricing and the importance of measurement. So that's how we're going to structure it today. I'm going to start off, as I say, just in terms of putting pricing into context, and I'm going to do it in 2 ways. Firstly, a lot of you listening probably know about the marketing mix. Now, if there's marketing gurus, experts out there listening, you might wonder why I put 4 Ps up there and not 5 Ps or 7 Ps, and there are different versions. The reason being, I just want to keep this as light as possible, and 4 Ps are enough for me in terms of this presentation. And one of the Ps in each of those different combinations of the marketing mix is price. So price is an element not just within finance and all those parts of a sales module or sales element. It's really it's a lot to do with marketing and how you present your business. People make decisions around price, both in terms of how they sell what they do and also in terms of how people buy from them. So it's really important to understand that price has a place in other elements of your business. and how it overlaps with those. I'm now just looking, I'm going to show you here just something that I've constructed myself. A lot of the mentoring that I do with small businesses, I tend to get told that there's a problem with finance in some way, shape, or form. And sometimes it's the business owner themselves don't actually know what the problem is, what the issues are. So the way I approach it then is the structured way that I look at what I call the 5 pillars of good business finance. And the way I look at this is I think that each of these pillars on its own is very important, but together they form a foundation or a structure for for a business. And each one of them has to work to make the business better from a financial perspective. So on the left, the first one is good bookkeeping. So I think a good business has a good bookkeeping system, and I'm going to touch on that later on just to explain the different types of bookkeeping, and particularly to talk about cloud-based bookkeeping systems and the importance of those and the increasing importance of those as we go forward. A reliable accountant, really important as well. And it's strangely enough, I've been working with quite a few businesses on the bookkeeping side and talking to them about the importance of cloud-based systems to make their life easier and then more compliant. And some of them have actually said that because the cloud-based systems are so good, they're not necessarily certain they're going to employ an accountant. They believe they can do some of that themselves. I'm not recommending that. I'm just saying that some businesses are thinking about that. But having a good bookkeeping system and a reliable accountant, first 2 pillars. The third one, now, a robust business model. This is actually where pricing sits. So a business model for any organization, and it's really how you operate. It's basically everything to do with your business, the services you offer, the operations that you have around those services, the funding structures, not funding, the logistics of those, and things like property, staff. But pricing sits in there because really it's an element of how you deliver your business to people and the model under which you operate. The fourth pillar there is funding. So obviously funding is a really important pillar for businesses in terms of making sure they've got enough funding in place to finance their operations, to finance their costs, to cover everything and to make a profit. And the final pillar there is regular oversight and planning. So this is all about making sure that if you have a business and you are running it, that you are watching over it, you're looking at it, you're looking at the financial aspects of it, and you're managing it. So the oversight comes in 2 parts. One is historic. You look back over your business and you understand what's happening in your business in terms of sales, in terms of costs, in terms of profit, and in terms of pricing. And you also do an element of forward planning or forward forecasting. Funny enough, that last pillar is the one that I found recently a lot of businesses aren't really getting right. They're not doing a lot of oversight of their business. They're not really taking a step back in their business and looking back over trends. Are their sales this quarter compared to the previous quarter? Are their profit this first half year compared to the same period last year? Things like that business aren't really doing, and they're not also doing a lot of forward planning. So I think now, especially when there's a pause in activity, it's a good opportunity for businesses to have a little think about where they are and where they want to be in 6 months, 12 months, 18, 24 months time, and do a little bit of financial planning around that. So those 5 pillars are important. Right in the middle of those in the business model is the pricing element, and that's what we're going to talk about in the course of the rest of this webinar. I'm going to start off though by just having a little look at profit. So what is profit? And effectively, there are 2 main definitions of profit, and the first one is gross profit. You may have heard these expressions, in fact, you may know them extremely well, but for those that aren't 100% sure, your gross profit is simply your sales less your cost of sales or your direct cost. I'm going to explain that to you shortly. I'm going to show you what that actually means. The second profit definition that businesses talk about is net profit. So net profit is your sales less your direct costs and also your indirect costs. And it's important to understand the difference between your direct and your indirect costs, especially when it comes to pricing. And when I show you the templates, we'll break out and have a little look at the templates, you'll see the importance of understanding the difference between direct and indirect costs, because businesses sometimes get a little bit confused between direct and indirect, and even between fixed and variable costs. But I'm going to try and explain that to you so you can understand the importance of them, particularly when it comes to pricing, and particularly when it comes to profit and understanding what your profit is. So those 2 definitions are important, and we will be coming back to them. In terms of what they actually look like, This is an extract from just a mythical company. This is a makeup company, just to give you an understanding of what a profit and loss looks like. I appreciate people who are listening in on the webinar, watching in. This is something you maybe are extremely familiar with, but for those that aren't or want a little bit of a refresher, effectively your profit and loss account just shows demonstrates, if you like, how much money you're making over a period of time. So in this particular case, it's a company called Belfast Maritime Tours. It's for one of their business, and they had sales of 24,000. So that first calculation that you see there, less cost of sales, which is your opening stock, and having purchases, less closing stock, that's a little formula that's used to try to calculate what a business's gross profit is. And in this particular case, they don't have any stock. They just buy things, and those purchases of £12,000 are the direct cost of this business. That's what I explained earlier about the importance of direct and indirect costs. So that £12,000 represents the direct costs for this business of making sales of 24,000. So the first calculation there is to calculate what your direct cost is, subtract that from your sales, and then work out what your gross profit is. I'll explain why gross profit is really important later on as well. And underneath the line there, underneath the gross profit line there, you can see expenses, and I populated that with just some sample expenses. And these are your business's indirect costs. So these are, what that means is they're costs that aren't able to be applied directly to the particular item that you're selling or the service that you're selling. So they're overheads, also referred to as overheads. And you can see I put down there the typical overheads would include your rent and rates, your telephone, your internet costs, insurance costs, bank charges, advertising, promotion, your staff wages, accountancy fees. Things like that tend to be not applicable to a particular product or service. So it's really important to understand the distinction between the gross profit and your net profit, especially when it comes to pricing. So why is profit important? It provides you and your business with surplus cash. Again, that's probably very obvious to everybody, but it is important to understand that that's what you're there for. You're in a business, you're trying to make profit. It's really important that you understand the elements of that and how those elements impact on how much profit you make. It allows you to make a living from your business. So obviously, if you do have surplus cash, that surplus cash is yours as the owner. If you're a director and a shareholder, it'll be the profit as well you'll take by way of a salary or dividend. But ultimately, you're trying to earn enough money to keep your business going, but also to give you a living. And finally, you need to calculate it for tax purposes. So this is a compliant reason as to why you would want to understand and calculate profit and why it's important to you. And believe it or not, a lot of people, business owners that I meet, actually, when I ask them about their profit and loss account and producing that, most of them talk in terms of the third element there. They talk about it in terms of the need to produce it for tax reasons. I've met quite a few businesses, for instance, who just tell me that they don't really produce any profit and loss account. They give all the information to their accountant, even through their bookkeeper. And the accountant produces a profit and loss account, and then that's used as part of their tax return. Now, that's really important that that happens, but I think there's something missing there, because ultimately the business should be producing the profit and loss account. The business should understand what's going on and then present that to the accountant, rather than waiting for the accountant to produce you or give to you a set of accounts at the end of the year, or often 6 months after the end of the year. So in terms of what we're looking at here, we're looking at pricing, we're looking at profit, and we're understanding the link between the two. And we're going to get into that a little bit now. I'm going to just look now at the methods that business use for coming up with their pricing. Now, there's quite a lot of these, and even some of you listening might be working on different types of pricing methods, and they're all perfectly okay if they suit and are relevant to your businesses. But for the purpose of today, I'm going to break it down into three key types of pricing. The first one is cost plus method. You might be familiar with that, but that's quite simply a business who's looking at what it costs to make something or provide a service, and then they add something onto that, which is their profit. So basically, that's a very fundamental way for a lot of businesses to work out how they make some money. So it costs them £10 to make something, and they sell it for 30. So they're marking that up, adding something onto the cost to arrive at their sales price. And the difference between the sales price and the cost to make it is their profit figure. So that's the first one. We're going to look at that in a little bit of detail today. So when we break out and look at the spreadsheet template, that's going to be a fundamental part of that. The second method, so I'll just go back to the first method. Actually, when I think about it, that's a method that is used often by like restaurant businesses. I've helped quite a few restaurant businesses to come up with a structure to how they can look at their menu items and how they can arrive at what is a proper markup or a cost plus method to give them a proper price on their menu that means they're making profit. I did work with a business recently. They were a bar restaurant business, and the owners, they basically were telling me that from their perspective, their chef ran the kitchen, and the chef organized the menu, and the chef organized the pricing. And that was all very good, but the owners had no idea themselves as to whether they were making money on the menus and which of them the menu items were making the most money for them. So I was involved with them to try to work out a methodology to find out a way to calculate the cost of making each of the food items and then be able to apply a markup to that. So the owners would get an understanding of the actual profit that their business is making. The second one there is competitor pricing. Now, so competitor pricing, I found that to be a very popular method among many businesses, especially startup, and they look at what their competitors charge and they try to position themselves in and around those figures. Maybe not at the top end, maybe not at the bottom end, but somewhere in the middle. And there's nothing wrong with that either. It is a valid way to arrive at a good pricing structure. However, it's on its own, it doesn't necessarily distinguish your business from other business. So competitor pricing I find very popular in retail type businesses. So businesses like hairdressers and hair salons, beauty salons, and coffee shops, where they basically look and see what everyone else the street's charging, and then they make sure they're not too far away. Again, it's not wrong. It just on its own, I don't think is sufficient for businesses to arrive at a proper pricing structure for the business. And the third and final method we'll look at today in terms of pricing methods is consumer value. So this flips things a little bit. This really actually takes your price and whatever you're planning to sell something at and looks at it from the consumer's perspective. In other words, what are you producing to the person who might buy it from you that they're looking at and saying, now that's worth it, that's something I would like to buy. And what would I pay for that? So this is trying to flip it a little bit. And it's a way to actually challenge your own pricing system to allow you to step back and think, well, am I offering something that's like quite a little bit different? And is this something that really, well, the cost plus method or with competitors, have I got something extra in here that I can charge a little bit more for? I'm going to look at a system just later on today that actually combines each of those three. So it's based on a cost plus method, but also involves having a step back and looking at competitors and consumer value. So that's really what we're going to be looking at. I'm going to break that down, that process down into 6 steps. So the first step is define your services. Secondly, it's calculating your direct costs, and we'll look at each of these in turn. Calculate your direct costs. Number 2, working out your time, setting your price, reviewing your profit, and then benchmarking your pricing. So I'm going to look at each of these. So the first of these, defining your service. So in terms of taking a step back and trying to look at what you do, it's really important that if you're offering a service, you know exactly what it is. So I would encourage anyone who's offering a range of services that they actually fully understand what they are. So I'm talking about writing down the name of the product or service, describing who your target market is, writing down details of the product or service and what it is you're trying to do and what you're trying to offer to customers. And then have a look separately at maybe the sector that's in, the location, and different elements of that. So it's really about being clear about what it is you're offering. And if you're offering a range of different things in a range of different sectors, it's about being clear about what each one of those is. Step 2 is to calculate your direct costs. And I will show you how that can be done in terms of calculating direct costs. So the types of direct costs that I'm talking about would include booking fees, charges, entry fees, perhaps if you're taking people on a tour, if it's a tour business and you're taking people to a venue, you've got to pay money in for that. So you take £25 in your ticket price. And then after that, you've got to take you've got to pay £5 as an entry fee or something to somebody else. So really important that you understand that that's a cost that you're going to have to pay immediately out of any money you receive. That's why they're called direct costs. Putting handouts or gifts you might give people as well as part of any service that you offer, or the cost of food or the cost of drink that you actually have to produce or bring in or make up to present as your final product or service, and then any other direct costs that apply to your particular business. Step 3 is working out your time. So this is basically, it depends if your business is a time-bound business. And by that I mean that this is something, a service that you yourself deliver, and your time is like a tour operator or even a photographer or somebody who actually is taking some time and you're actually spending it on the service that you're offering. So really important that you understand that not just the event time needs to be tracked and managed, but also any preparation time, any time you spend building up to that service, and then also any post-event time. So anything you have to spend afterwards to get things done, all of that needs to be logged and checked and controlled. Otherwise, you won't know the time you're spending on what you do and whether the charges you're applying to customers for those services are appropriate. And particularly, are you covering your time? Are you making a return on the time that you're investing in your business? So also significant other time at marketing. So people spend a lot of time now, more time than ever, on marketing. So step 4 is setting your price. So consider your expertise, your knowledge, your break even. I'll touch on break even later. It's an important aspect to understand. I'm going to touch on that and explain what that means. But effectively, it's about where you've got to a point where your sales cover your costs. You're not making any profit, you're not making any loss, but you've covered your investment in terms of money. Your minimum hourly rate, you've got to understand what's the least you want to work for if it is something you provide as a service by you, and then your costs and your indirect costs. In terms of setting your price, just I'll share with you a recent story that I had with a business owner, not in your sector, I have to say, but he was a man who had is a boiler service engineer. And he'd been running his business as a sole trader for the best part of 30 odd years. And he built up a lot of clients, a lot of clientele. And when I got involved with him, his main aim was he was bringing his son into the business. He wanted to bring his son into the business to, really he wanted to give his son a route. His son had some learning and difficulties. And he wanted to bring his son, so he's bringing him through as an apprentice. And he wanted to make his business more professional. So he wanted to get a cloud-based bookkeeping system set up for his business. And he wanted to be able to go into a person's house, because he did commercial and residential, go into somebody's house for a business, be able to do the work, and there and then record a sale, take the money off them via a payment card system, and also be able to give them a receipt online. And he was going to do that through, well, it turned out he was using QuickBooks, and he was using that with his mobile phone, and he wanted to be able to have a lot more automated. And he wanted this to be able to be something that he could professionalize his business with, and he could pass it on to his son eventually. Now, the issue about pricing came up in the context of the discussions, because I said to him, how did you set your pricing, or what will you charge for your core service? And I'm not sure what any of you have paid recently for a boiler service, but he told me he was charging £45 for boiler service. And I immediately thought that sounded quite cheap for boiler service. And I said, so how did you arrive at that pricing? And he said, well, to be honest, Tony, I have been charging £45 for the last 10 years. And I said, right, okay, and why have you not increased it? He said, well, my customers are used to paying that, and I really don't want to increase it. I think that they wouldn't want to pay it, and they're very loyal to me, and I want to be good to them. I said, so 10 years ago was you increased it 10 years ago to the 45? I said, yeah. And I said, what was it before that? They said 42. So 10 years ago, he'd increased his price from 42 to 45, so £3, which was, do the sums, less than 10% increase, and no increase since. I said, well, why are you not increasing it now? He said, well, I'd like to because my son's coming on and I have an extra cost, and really should. I said, what do your competitors charge? And he said, well, most competitors will be charging from £65 up, maybe 65, 75, and some even more than that. And I said, are they offering a better service than you? And he said, no. In fact, I offer a better service because I will take the time to get something right. I'll make sure I don't leave the premises till it's fixed or I've got the parts. So I really am dedicated to it. I said, well, why are you undercharging then? And he said, to be honest, I don't know. So we had a little conversation, and at the end of it, I wanted him to increase his price to 65. So I recommended he increase to 65, obviously his decision. Eventually, he did decide to increase to 55. And I met him again about 3 weeks later, and I said, well, how's it going? And he said, great, great. And I said, what about your price increase? Did you introduce it? He said, I did. And I said, and what have people said about it? And he said, nothing. I said, has anyone commented on the fact that it's 55? I said, nobody. And I said, well, what do you think that is? Is because they're just used to paying it and used to paying me. And, you know, they didn't have any issues with it. In fact, some of them said that they realized it had gone up £10 and wondered why I'd never increased it previously. So the message there is that sometimes you get involved in looking inwardly at what you're offering. This guy was offering a premium service. I did ask him at the end, had he any regrets about the pricing? And he said, yeah, I should have increased my prices 5 years ago. And he said, as well as that, he said, I should have increased to 65 this time around. And he said, I might still do that. And that was something he was still considering when I last spoke to him. So pricing is really important about setting it. Now, he did use an element of competitor pricing to look at what he was doing. His costs were only his time and some parts as well, which he sometimes factored in as an extra to his 45. So the point in there is it's really important to set your price as part of this process. But then after you've done that, step 5 is to review your profit. So we're going to look at your gross income per product or service, your net income per product or service, and any costs and indirect costs that are involved, and to look at the return on your investment and time. So that's the step 5. Step 6 is to benchmark your price. So really to step out and say, right, I've arrived at my pricing because I've looked at my costs, I've looked at what I do, I've looked at my time involved in that. Now, can I come back out and have a look and see what everyone else charges? Am I in there or am I above? And it doesn't mean that you then recalibrate your pricing to something that matches your competitors. If you're offering a better service than others, then it's really important that you continue to think that you're offering a premium service, and your pricing, which may be higher than your competitors, may well be acceptable. The second one there is obviously reflecting consumer value, which has come back to the boiler service engineer. You know, that's something he hadn't done. He hadn't stepped back and looked to see what do they think of the service that I'm giving them, because these are people that have been dealing with me for many years, and you know what? They're not going to go anywhere else. In fact, if they go somewhere else, they're going to pay more. So if they said, "Oh, your price has gone up, I don't want to go to you," he could have turned around and said, "Well, that's fine, go to somebody else, but you're going to pay more again." So you know, it's something just to be conscious of, that you may be offering something that in their eyes are willing to pay a little bit more for. Obviously, and then under step 6, there's an element of seasonality and topicality, just making sure that you look at your pricing, you know, seasonally, if that's appropriate, in terms of more or less in summer, autumn, winter, or peak events, Easter, Christmas, Halloween, whatever. Focus again on your USP, your unique selling proposition or unique selling point. And if you offer a premium product or premium service, don't be afraid to explain that. Don't be afraid to show people that that's what you do, and to offer it to them and tell them that you know, we're different than everybody else. Our pricing may be different, but we're absolutely different to everybody else because we offer something extra. Ours is different because. And finally, review regularly. Pricing is not something that you wake up, fix, and then get on with. It's something you keep under regular review. You keep looking at how the pricing works. If you increase your pricing, does that increase your total revenue? Does it reduce your total revenue? Are your competitors moving their prices? So there's something to keep an eye on, totally. So that's the 6 steps. We're now going to take a little look at pricing in action. So what I'm going to do now is I'm going to come out of the PowerPoint, and I'm going to have a little look at a spreadsheet template that I've used with other businesses, and to show you how you can maybe take something like this, or maybe you've got a version of your own that you can use to try and put a little bit of practical application to some of the theory around pricing. So what I'm going to be showing you isn't the full extracts that I've used with businesses, but just elements of those that you can maybe apply some of the features and elements within that to your own business. So bear with me now while I just come out of this PowerPoint presentation. I'm just going to go into an Excel. So bear with me now while I just do that. Okay, so hopefully you can all see that. I am just showing you now a spreadsheet. And again, this isn't the full version of it. And by the way, if you're looking at this and you're maybe saying, well, that's not my business is slightly different than that, that's not right. What I'm trying to show you here is that there is a methodology to approach your pricing in a structured way. What I'm showing you won't reflect every single type of business on this webinar. Each one may have its own different specific aspects that need to be looked at differently. So this needs to be applied to your business in terms of maybe tweaking it and making some changes to it. I want to take you through here just a couple of tabs, and I want to show you how different types of business would approach a pricing methodology. And what we're looking at here initially is a cost plus method. But I'll show you then how the other methods, the competitor analysis and the consumer value methods are also and can be brought into this process. So the first one I have up here is a tour pricing business. So I did a couple of webinars last week with some tour businesses, and we worked through a model similar to this in terms of how to apply the pricing structure to what they do. So what I have in front of me here and what you're seeing is a tour pricing model, and you can see quite simply the way it's laid out is they offer, in this case I've just set up 2 key services. They could actually offer 10, 15 different types of services. I just set it up, they do a tour 1 and a tour 2, and I've set it up that they can set in how many people they would take on these tours, the price that they would charge, and then I've got a number of direct costs, examples of direct costs that they would apply to those. And then there's a line for indirect costs, and I'll take you through the indirect costs in a moment as well. So basically the steps involved that I went through, this first step that I talked about on the previous slides were step 1, which is defining your service. There's a little pop-up note there to say, step 1, define your service. Now I've just put in the name of tour 1, it could be anything, but the defining your service would probably take a little bit more detail than just saying its name. So I've explained in one of the earlier slides what that involves in terms of writing down exactly where it is and who the market is, etc. So step 1 is defining your service, what it is, what its name is, what people will see it as. Step 2 is going down left-hand side in terms of identifying your costs. So basically it's looking at the direct costs, which I'll explain in a moment how these are arrived at and how these figures work through in this template. And then we get down to step 3, which is looking at the time. So this, for a tour business, time is important. I'll explain how looking at the time that you spend during an event, before an event, after an event, all have an impact in terms of the price that you charge and in terms of the profit that you make from that. So step 3, step 4, we will be looking at in terms of so step 4 is the price itself, which is again back to the price per person, which is how you actually decide what it is you charge. In this particular case, this is a tour business that already has these events in place. So this is a way to understand, based on the current pricing that they have in place, how much money are they making from it, and how could they adjust certain elements of their pricing mix, if you like, to make more money from this. And but you could also, for this, you could set up another set of column here, and you could put in a new product, and you could use this to calculate what sort of price you could or should charge for it. So if you take it just down just this one column, basically this tour, the number of people that would take in this normally is 12. The price they're charging is £25. So you can see 12 at £25. When you multiply 12 by 25, you get £300. The gross income that this tour generates for this business is £300. But this business has to pay a £5 booking fee, and that's something that they have to take off the cost of the ticket price that they get. So that's immediately 12 5 or 60. So they've got to take £60 off before they get any money. That booking fee is probably on the high side. It's just in there. Yours maybe a little less than that, but I put in that a price to show how this actually works. In this case, they don't have any interest fee anywhere, so they just happen to have £60. And then there's other fees they pay out for things that they do for this particular tour, costing £1.70 each, which adds up to £20.40. So you can see in this particular case, this business direct costs for these, and these are types of direct costs, and this is the actual direct costs that this business will incur for tour one. So that adds up to £80.40 as the total cost of this particular tour or event. And then below the line, you can see then that the total income they get is £300. The markup that they get based on the cost is at 273%. And then you can see the gross profit per group on this here is just taking away your cost from your gross income to say £219.60. So this tour business, by just doing a little calculation like this, can work out every time I take a tour of 12 people around and they pay that price and they pay those charges, that's how much money I can make on it. That's good in itself. But if this tour is a 2.5 hour event and they spend 3 hours in prep, getting ready for it and doing all the things for it, the total time is 5.5 hours. And the hourly rate that they get from that is £39.93, so £40 an hour. But that's allowing them to take account of the time they spend outside of the actual event itself. And this is something that people often forget. They forget the time that they spend on other things outside of the actual, in this case, a tour. So the point of having a template like this is it allows you to play around with it. So you can look at this and say, well, what if I was able to take 15 people around? Maybe under the current COVID rules, it's probably more likely 14. But so if you take 14 people around on this tour, you see the impact on that. That's going to bring your hourly rate up to £46.58, and your costs go up a little bit in the booking fees. But by bringing more people around, very clearly, you can see that you're going to make more money. And equally, if you're running a tour with a lot less people, and this is a £25 tour at 14 people, you can decide to offer this. If you decide to increase your price to £30, your hourly rate goes up to £59. So the point in this here really is to allow you to see that taking pricing away from something maybe in your head and bits of paper, putting it on a spreadsheet will help you. I know there's people listening maybe aren't that familiar with spreadsheets. There's no reason why you can't take this and put it in a bit of paper and do a calculation yourself as well that way. It's still possible. This just makes it a little bit more flexible, a little bit more reactive, and you can look at this and you can change different elements of this. So the elements you can change: the number of people on the tour, the price you charge, the cost per item. You can also look at the time you spend on the event and the prep time. So if you're able to reduce your prep time to 2 hours, it increases the hourly rate. So it allows you to do all that. It also allows you to work out a break even. I'll be talking a little bit more about break even later. But this is tour 2. The people they've taken out of £6. It's a very short tour, in their mind, an hour and a half. But basically, in this particular tour, they're paying out £30, £40, £20, and their actual total income is £40.20. So they're just breaking even on a tour that has 6 people on a price like that. So you can work out what I would need to start earning to begin to pay for, give myself a little bit of profit on this. And you can do that by, in this particular case in tour 2, increasing that to £12. At that point, you're still only earning £7 an hour. But you can play around with this and make it work. That's a template that you can use. And maybe you're using something similar to that already to approach your pricing. Moving on to the second tab, you can see this blue one here, this indirect cost element. These are the direct costs I've talked about. Some businesses like to also think about how to incorporate their indirect costs into the pricing model. That is possible. It's just a little bit more difficult. I'll show you just on the next slide how that can be done. Quite simply, this is just a business that it's worked out as annual costs. That's overheads, if you like, are £2,400. So that's their internet costs, maybe insurance costs, maybe petrol and other things that they use, or marketing costs, and it all adds up to £2,400. In this particular case, it's £2,400, and that works out at £200 monthly. Divide that by 12, you get £200. If this business plans to run 10 tours a month, you can estimate that the monthly indirect costs or monthly overheads that apply to each tour will be the 200 divided by 10, which would be 20. So going back to the first tab, we just put in your indirect costs then of £20. So you're able to bring in your indirect costs to get a sense of how that also affects your pricing. A little bit of caution around that, simply because calculating the indirect costs is sometimes a little bit, you can probably calculate them okay, but applying those to your events, which maybe take longer to run or less to run, or you're providing a service that maybe covers 2 different areas of your business, and it's harder to apply those. But businesses may want to think about applying the indirect costs. I recommend you don't initially do that, but you do think about what your indirect costs are to make sure that your pricing does cover those. This bigger table at the bottom is just a different way to do it. Rather than actually work out the annual cost and divide them by 12, you could actually do a full forecast for the year, and you could look at each particular month and look and see what the costs are for each individual month, and then you could apply that the whole year. So staff wages 5,000, you get £5,000 a month, works out at 60,000 a year. Sickness is a much larger business, and the first one of 2,500 costs. You have £75,000 total costs, and you can work out their indirect costs. How would I apply those to the services and products that I provide? So that's important just to understand. If you want to, you can bring indirect costs into your calculation of pricing. I'll just look again now at another type of business. This is restaurant pricing. I've done this with a couple of restaurants. I mentioned earlier that the pub restaurant that I worked with to do this. This is just again a process whereby you can look at the costs of the actual ingredients in your menu items, so you can actually look and see what each of them is and what they cost you to buy in. You can add them all up as we did before. You get a total cost of your ingredients based on whatever they are. And then in restaurant businesses, food business typically have a 25 to 30% cost of item in any menu price. So typically you'd be talking about the cost of item ingredients is £1.45. For a typical selling price, you would need to be selling that at £4.83 to make a reasonable profit on that. In this particular case, they can apply their actual menu price, which happens to be £4.50, and they know that they're probably charging a little bit less than they should be on this. And secondly, when the second menu item here costs adds up to £3.25, the markup on that brings it to £10.83, so that's what they should be putting on the menu for. They're putting on the menu at £15, so they're making a little bit more than that. They're making an extra £4 on what they probably generally should. Now, the point I make here is that if your business has a lot of products, a lot of services, maybe like a restaurant, different meal items, it is important to look at each one to see what each one involves. You may not want to do every single one, but certainly the material ones, the ones that are the big products or big services for you, it's important to do that. And then finally, and this is going back a little bit to one of the pillars that I talked about, the 5 key pillars of business finance. This last tab here is the forecast tab. So this is just a little extract again of something that I've used before for businesses. The bigger version of this has costs and all involved, but just quite simply looking at this as a forecasting tool. So bringing in all of the information you've got on your pricing, looking at your services, and then deciding, well, what will that do for my business, or how will that look for my business over the next 6 to 12 months if I offer these particular services at whatever price they are. And whatever price they are, if the price is £10 and you're deciding for service 1, you're going to sell £25 a month for the next 12 months. You're talking about that generating income for you of £250 on that particular service item on a monthly basis. So clearly it's a little tool again that you can play around with in terms of seasonality, changing it, and you probably all have maybe at some stage done some element of forecasting in your business. So this is really driving the forecasting bit into the pricing bit, because alongside this you can also put in the cost of what you are actually charged for these items. You get a bit of visibility of what you're selling it for and what you're actually paying for it to get it out the door to people. So that's again just looking into the pillars and shows you just a way to bring that into your pricing strategy, your pricing thinking, and to make sure that you don't just price it. You say, well, if I price it at that, how many will I sell? Okay, so that's a quick run through a template version and a little bit of a practical application of what I talked about earlier. So we're going to just move away from that now and go back into the PowerPoint again. And we're just going to have another look at some of the other aspects of pricing just to take that through. Okay, so yeah, I mentioned break even a couple of times, so I just want to touch on that. There isn't time to go into it in any terms of calculation methodology here, but break even is defined through Wikipedia. It's quite simply as the break even point, as the point at which costs or expenses and revenue are equal, i.e. there's no net loss or gain. So really that's really saying, well, what income do I need to generate to get to a point where I've covered my costs? What point do I begin, and after that you're beginning to make a profit. At what point am I beginning just to get into a profit situation? Why is that important? Well, clearly you want to know if you're opening a new business or starting a business, how long will it take for you to recover any of your costs? Or if you're starting a new product or a new service, how many of those would you need to sell before you're beginning to cover the costs of actually making them or bringing them in, and any overheads or fixed costs you have relating to them? So break-even 1 slide, break-even 2 slide talks about the measurement of break-even. Break-even is important to measure, I think, in terms of the amount. So what is the break-even amount of revenue you need to generate that covers all of your costs? Equally, how many units do you need to sell of a certain product or service to bring you to a break-even level? And the third element, which a lot of businesses forget about, is the timing aspect of it. Break-even is very important from a timing aspect. So if you start a new business or launch a new product, well, you might work out what your break-even point is in terms of pounds, be that 10,000 or 50,000, or maybe units in terms of 400 or 800 or whatever, but you need to know how long it's going to take to get there. So you need to understand how long it's going to take your business to arrive at a point where it's broken even. Why is that important? Well, it's important because, you know, if you start a new business or launch a new service from January, you want to know, are you going to begin to break even in March or June or July, or will it be the following year? And certainly many long-term capital projects maybe take 2 or 3 years. But if you're in a business now, I'm guessing that you're going to be wanting to break even as soon as possible. So working out your break-even point, working out what that is in terms of revenue and how many units or elements of what you're selling you need to generate to actually make that happen, and then looking at the timing of that. All those elements of break-even are important to understand. So that's a topic that comes up quite a lot, both in terms of financing generally, but pricing as well, because the pricing is important in here. Because increasing your pricing will bring your break-even point forward and bring it closer. Reducing your pricing will put it further away. And equally doing the same on costs. Bringing your costs down will bring it closer. Putting your costs up will push it further away. So it's important to manage all those aspects. So, and I want to just talk a little bit about the measurement side of this here, because I've met quite a lot of businesses who do take the approach that finance and recording of things and bookkeeping is a real onerous task and something they're not particularly keen to do, and it's something that they have to do, and a lot of them move that towards their accountant or a bookkeeper. But and that's important to have that done right, and there's nothing wrong with that necessarily, but the point is that in the interim they're missing out on the fact that they don't have access to good quality financial information. So if you operate off paper-based bookkeeping systems or even spreadsheets, you're probably less likely to have good quality information. Although increasingly, I'm meeting a lot of businesses who actually do have a good, proper bookkeeping system, but they're not using it right. So they're not actually going in and looking at that from a management accounting perspective. They're not looking at that in terms of the information it gives them. So the sales they generated this quarter versus last quarter, the costs this year versus last year, not getting and finding out that information themselves. So I'm putting this up here in the context of something you may have heard of called Making Tax Digital, MTD, and that is a HMRC project which is aimed at getting all businesses, sole traders, partnership limited companies, limited liability partnerships, any financial structure, onto a tax digital platform, which means what they're trying to do is get all the business onto a platform that brings their bookkeeping system in line with the tax system. So that's already happened for any businesses that are on the line who are registered with VAT. So Making Tax Digital for VAT purposes is already here. It isn't here yet for corporation tax or for income tax for sole traders, but it is coming. And the HMRC at the minute are committed to introducing that. As far as I recall, the last I heard is it's in April 2023. I can hear people saying, oh wow, that's so far away, I can forget about it. You can, I mean, it's not urgent that you need to do right now, but I'm encouraging businesses to start thinking about that now. And not only just because it's a compliance issue and you're going to have to do something like that, you're going to have to find a way to link your bookkeeping system to the tax system. And all of these platforms, and these are examples of some of the cloud-based bookkeeping systems that are out there, like QuickBooks, Xero, Sage, QuickFine, ClearBooks, whatever, Cashflow, lots of other ones out there that are all cloud-based. And that QuickFile version, by the way, is a free version. The others are paid-for versions, but QuickFile is a free version of a cloud-based system that's out there. If you want to have a look into that as an option. So basically, what I'm suggesting here is that if you take pricing seriously and take profit seriously, if you don't track it, if you don't follow it, if you don't manage it, and you don't look at it on a regular basis, then you're losing something there. So I'm saying that these two sit side by side. So that's an important aspect to consider in terms of pricing. Just putting up this 5 pillars of good business finance again, just put that in context. So basically what I'm saying there is that the making tax digital piece is a compliance element, but the important aspect really here is that from a business owner's perspective, you should be taking control over all of these aspects of your business. And under the robust business model, middle pillar that I've got there, pricing is a really strong and important element of that. And while you might think that you know your pricing and you might think that your pricing is right, and you may well be right, it may absolutely be right, but I'm suggesting that if you're in doubt about that, you take some structured approach, maybe similar to the templates I showed you, or something that you've got yourself that you use to validate your pricing, and not only validate it, but understand the impact that has on your business in terms of profit. And profit is important, not just for compliance reasons, but that's how you make your living, and you want to make more profit from this. And it's possible to do that, I think, by taking a formal structured approach to this. So moving on then to, this is probably for larger businesses. And I say larger, I'm talking about micro businesses being defined as up to 10 or less than 10 employees, and small businesses 10 above, typically up to, depending on your definitions, but 50 or 250, that's a European definition. But larger businesses as maybe not sole traders, but they can consider this as well. So I'm saying that if you really want to take it seriously, and perhaps you've got a diverse range of products and services, having a written strategy, writing it down into a document that might be 2 pages, 3 pages, or something that says, this is our pricing, here's how we approach pricing, here's the sectors that we work in and operate in, and here's the sectors that we want to operate in, here's the markets that we're in, here's the types of customers that we're involved in, here's the customers we want to get, the customers we currently have, the mix that we've done, here's what our competitors are doing around pricing, and there's a seasonal aspect as well. You can factor into that discounts and all other aspects of pricing that you might want to do and bring into your own strategy. So that slide there really is for businesses that maybe are a little bit larger, or certainly have a lot of products or a lot of services, and they want to maybe just put a bit more formality, a bit more structure around what they do. So nearly there, folks. Just want to go back again over what we've covered so far. So under these just quick bullet point headings, so profit we talked about. Know your gross profit from your net profit. Understand the difference between the two. And under the cost box there, know your direct costs, know your indirect costs. Just understand the construction of those. Putting those in context, the 5 pillars of finance, good business finance, and the marketing 4 Ps. So pricing isn't standalone. Pricing is something that is overlaps with other areas of your business, and it's important to understand that, but it often gets forgotten. It's in there, that's my price, I've had that for a long time, that's what people pay. But be prepared to be challenged on that. Even if you want to talk to somebody through some process or rather, that you can ask them, well, what do you think of my pricing? Somebody who isn't a family member or whatever, just somebody who might be a little bit more independent than that, who might say, I think you're not charging enough, particularly if you're offering something that's unique, that's different. And then you need to try and enlarge on that and explain that to people, that that's why you're charging a little bit more for it. I was speaking to a business this week actually on that, and they offer a very unique experience to somebody, very unique. Nobody else can offer it, and yet they price their products within the range of all of their competitors who offer something a bit similar but not what they can do. And I was only in discussions with them that they realized that they're just underselling themselves. And not only that, they can actually take that element of their business and they can put that up at the top of their marketing speed, because nobody else has this. They are the only people who can actually offer this particular thing. So begin to think about what you can offer and see, can you do that? So recap 2, benchmarking your value. So making sure that you charge for your knowledge or expertise. Customers often want to pay more as their minds associate the higher price with increased value. So yeah, some customers, and this is about flipping it again, and this is a consumer value aspect. Some customers look at something that's higher priced and look at that, and they're willing to pay it because they know it's higher value. But you've got to explain that to them and make sure that it's something that they can understand they're getting more for. So if they're comparing something you offer for £15 or 50 quid or 100 quid, and ultimately it's something that Somebody else might be offering similarly. You've got to just distinguish yourself and say, yeah, but they're not offering what I do. It's about benchmarking and stepping out from what you're doing and looking from their point of view. Would somebody be prepared to pay more for this? So the second one there, measure. So really just about measuring is about your bookkeeping system or your tracking system or something that allows you to track and see how you're doing on your income, your costs, and your profit regularly, and adjusting your pricing when required. So pricing is a moving feast. It is something you should look at least annually, but you should be looking at that on a regular basis to see, is it positioned right? How did it increase it or did it decrease it depending on circumstances? And I appreciate many of the businesses listening at the moment are certainly paused and maybe just waiting for things to start again. But that's a good time to have a look at this. That's a good time to step back and see what you're doing on pricing and see where your market is and your customers are and the types of services you offer. So, and you probably are already doing that maybe, and this is just towards the end of that as we hope towards next week, some sort of lifting or easing of pressures on business. And finally, there, just review. This is not a standalone process or a standstill process. It isn't standalone either, but it's a standstill. You've got to keep reviewing them on a regular basis. So you've got to look at your prices, your pricing strategies, review them. And don't be afraid to reach out to organizations and other bodies to get a little bit of feedback on them and to understand, not just from your perspective, but from others' perspective, to see where they sit. So that's the end of our presentation. Now that's basically a run through a profit and pricing presentation that allows you to at least, I think, have a little step back from where you are right now and maybe have a look at your pricing. And I would encourage you, if you do nothing else, to take something like the template or something you've got yourself and have a look at what you're offering at the moment. If you have this pause and have a real think about what you're doing, because there's most people that I speak to, most of them now, certainly in the last 3 or 4 weeks that I've spoken to, most of them are undercharging. And it is easier if you're launching something new, or perhaps you're even restarting your business because there's been such a long pause. It's always easier to reduce your pricing than it is to increase it. So if you have a higher price, but you want to offer a discount to somebody for a package or something like that, well, then that's important to think about that. But you're better to have your price higher at the start than lower, because people will get used to basically paying a lower price. And when you increase it, then notice that. So that's me finished, folks. I think there's time now for some Q&A, opportunity to ask some questions. There may well have been some questions coming in through the chat line, I'm not sure, but I'm certainly happy to pick those up. I would also say that there will be some top tips on pricing that will be collated. And I understand they're going to be put onto the Tourism NI website as well. So some of the analysts have come out of here and be some top tips, and they'll be brought together into something that you'll be able to get access to as well. So thank you very much for your time this morning, and I hope it's been worthwhile for you. And happy to take some questions now. Thank you.